Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So my name is Muhammad Shazmi bin Sahidun and my other group members are Siti Anis Amera, Muhammad Nur Akil, Hazwin Sofia, Fatin Hamiza and Farah Izlin. We are from group 13 and we're gonna talk about the stakeholder theory and accounting. So about the background or summary of the theory, the concept of an organization stakeholder provides a more detailed and complete view of the many different people and communities that are supported by that organization. So what is the stakeholders mean? So the stakeholders is a person or organization is referred to as stakeholder in a company when they have a personal or financial interest in the success or failure at the firm. According to the stakeholder theory, the management of a firm is expected to take into consideration the needs of all important stakeholders, not only the requirements of shareholders. This includes the requirements of employees, customers, and suppliers. So this concept argues that a company should strive to improve the overall well-being of everybody it affects. People who work for the company, lend the company money, invest in money, and even society as a whole might all be instances of stakeholder. So how prevalent stakeholder theory is? It's surprising how little it's used in accounting study. So stakeholder theory was employed in two different ways in most of the studies found. First, it is intended to provide an explanation for why certain information is included in financial statements or sustainability reports. And second, it is a method of increasing the breadth of the company function so that it encompasses more than just the primary concerns of shareholders in a company. Considering the importance of stakeholder theory and the fact that accounting information is heavily influenced by stakeholders, it is surprising that so little research has been done on the application of stakeholder theory to financial accounting, such as standard setters, establishing accounting disclosure in the first instance, and company management determines it in the second. And the influence of stakeholder theory on management accounting may be seen most plainly in the domains of systems of performance management. So the purpose of creating shareholder value is still the primary driver behind most of the literature on management accounting.
Thank you for my fellow friends. Okay, I will continue our presentation with the argument of the theory, which is we talk about stakeholder theory and accounting theory. Okay. Okay, in stakeholder theory is a way of looking at capitalism that emphasizes the link interaction that exists between a company and its customers, suppliers, employees, investors, communities, and other stakeholders. The argument in this theory is not only a single model to resolve the problem of identifying the proper objective of cooperation, but also consider economic and ethics issues that make companies take social responsibilities and to present fairness to everyone involved in business, with the result that directors will run cooperation for benefiting all stakeholders. In this theory also, the theory states that a great social wealth will be produced as companies win the loyalty from their stakeholders. The next argument is theory can be described as a healthy balance of economy and ethics that allow firms to develop while also promoting overall social wealth. Besides that, the theory presents a moral basis for respecting human rights and promoting efficiency. The argument that against this theory is ambiguous features the problem of balancing the contract and regulation protection of stakeholders and the enforcement issue. For the accounting story, it is a set of assumptions, frameworks, and methodologies used in the study and application of financial reporting principles. Uh, in this argument, it means the lowering contract expense as much as possible in order to get the most value out of them. Positive accounting theory investigates actual real-world transactions and occurrences as well as how organizations account for them in order to better comprehend the economic implications of those accounting decisions. And for the normative accounting theory, it instructs accounting policy makers what should be done based on a theoretical concept rather than looking at what is already happening in organizations today. This resulted in new unrealized gains and losses, which proved to be a significant sources of profit and loss.
Assalamualaikum, my name is Siti Amira binti Samsudin and my magic number is 71593. I would like to share with you about advantages and disadvantages of stakeholder theory. For your information, stakeholder theory incorporates the accountability of management to a broad range of stakeholders. It states that managers in organization have a network of relationships to serve. Let's talk about benefit of stakeholder theory. Impact on employees and customer. When employees feel appreciated, they will work harder, and harder working employees means a more efficient business. The efficiency also means we will have happier and satisfied customer. Customer will stay loyal and recommend the company to others. Enhanced investment, better performance, and a strong customer base means we are more likely to receive good publicity and higher level of trust from financial and investors who are more likely to add money to our firm. This, in return, will help our business grow and secure us a greater share of the market. Ethical benefits. When employees' job satisfaction rises, so does their mental health. It will also raise the company's social and economic standing in the communities. Improve reputation. Considering the needs of community, government bodies, and environmentalists while operating in a manner that's transparent and free from corruption, not only ensure the stakeholder satisfaction, but it's also improve the reputation of our company and foster good public relations, something that's especially important in today's increasingly connected. Next, disadvantages of stakeholder theory. First, determining the stakeholder. It is unclear how this can be accomplished nor how such a wide range and variety of groups can be legitimately identified. Second, confusion of purpose. Different stakeholder groups will not have the same commercial goals. Some people want a company to grow, while others want it to stay the same size, while still others want it to fail. Measuring the stakes. Stakeholder theory makes the stakes impossible to measure and thus compare by expanding the account from money to all human and social variables. Next, competition. A company's competitors are stakeholders because they are affected by the achievement of the company's goal. However, it is difficult to see what practical significance this can have between competitors. Next, distribution of benefit proposes that social rather than market force determine the allocation of resources such as information, time, and money to competing stakeholder interests. As a result, transparency may benefit one stakeholder while harming another. It is difficult to agree on which criteria should govern benefit distribution. Last but not least, stakeholder theory doesn't specify how stakeholders should be represented or how they should be given power to protect their interests. They can now gain a voice by purchasing a few shares or through the media. It won't be easier to recognize the power that stakeholder groups like customers and employees have in their own right. That's all from me. Thank you.
Assalamualaikum. My name is Farah Izzi Izhar with matrix number 69675. I will begin with the journal article 1, consists introduction, problem statement, objective, the findings, conclusion, and recommendation and contribution. Next, we go to introduction of this study with the title of journal article is Stakeholder Theory at the Crossroads, authors by J.B. Barney and Jeffrey S. Harrison, reference as stated in the slide. Next is problem statement and objective in this study. Problem statement, first, the shortcomings of stakeholder theory, different perspective on stakeholder theory, some issues cannot be resolved by adopting stakeholder theory, and how far stakeholder theory can be used effectively. Next is objective of this study is to discuss the major issues surrounding what has come to be known as stakeholder theory, to attempt to find common ground and to uncover areas in need of further inquiry. The findings in this study is scholars who attend the meeting to discuss the use of stakeholder theory reference and use sources from three journal articles. First, the title is Tensions in Stakeholder Theory consists a function of different perspectives resulting from divergent intellectual paths in the strategy and stakeholder domains as opposed to generally competing propositions that need to be reconciled. Second, when do powerful stakeholders give managers the latitude to balance all stakeholders' interests? As powerful stakeholders refrain from exercise their bargaining power to the greatest extent, managers have more latitude in terms of establishing a stakeholder management strategy. The third article, revisiting who, when, and why stakeholders matter, trust, and stakeholder connectedness. The actions of a firm toward one or a small group of stakeholders can influence the extent to which other stakeholders are willing to make themselves vulnerable to the firm and engage in future exchange relationships. The last one is conclusion and recommendation contribution. The conclusion is a substantial collection of accounting research that includes stakeholder theory has been detailed in this review. The relationship between stakeholder theory and accounting has been proven in detail and in depth. The stakeholder approach is by its nature very complex and comprehensive and cannot be a theory of everything. The recommendation contribution is first the evaluation of accounting in ways that allow for a better recording the recognition.
Assalamualaikum and hi, my name is Haswin Sofia binti Hussein and my metric number is 73044. The topic journal article that I will present is about an in-depth look at the status of environmental financial accounting in Mexico from the point of view stakeholder theory, myth or reality. Introduction. This journal was written by Saulo Sinforoso Magnus and Arcides Pellegrin Mesa. This study examines how Mexican businesses were using significant approaches on environmental financial accounting, or known as EFA. Environmental accounting defines and allocates external costs which should be deemed in choosing to work as well as communication services between both the stakeholders of a major corporation. Thereby, the goal of this research is to examine the use of environmental financial accounting in variable firms mentioned on the Mexican Stock Exchange in analysis to define how relevant conceptual efforts about the connection between both the environmental and accounting findings in Mexico have become. The problem statement. This journal discusses the state of environmental financial accounting in Mexico, whether the topic is a myth or not. Some countries do not use environmental financial accounting properly. This demonstrates that if the country does not implement environmental financial accounting, it will be difficult to account for and report on environmental events and transactions that influence or become able to impact a company's current economy state. Objective of these journal articles is to cope with the cost collection and quantification of environmental changes in accounting policy that could have an influence on a company position financially or financial achievement. Second, to determine whether the Mexican economy needs two activities to be able to validate the stakeholder theory. Findings. The findings surrounding the implementation of environmental financial accounting show how beneficial it will be to the business community. All valuable firms listed on the Mexican Stock Exchange in 2018 released findings revealing their environmental practices. This demonstrates the application of stakeholder approach. Conclusion. In order to encourage the BMV cooperative relationship to implement stakeholder theory via environmental financial accounting, they must embrace an environmental outlook as the big firms are able to determine environmental public spending. The further connectivity they had to skill that will enable them to take initiative sustainable development. It is also necessary to formulate public incentives that promote firms to adopt environmental financial accounting. Lastly, recommendation. Environmental regulation is one of the recommendations that all countries should implement EFA. It is because a business somehow does not exist in solitude. It requires the assistance of ecosystem to ensure maximum earnings. One of the contributions to this study is learning and understanding about environmental financial accounting, because as students, we may be well aware of the process of implementing the EFA that can contribute to the country, particularly as stakeholders.
The title of the third journal is An Improve to an Accounting Ledger Performance Inside the Signaling Theory and the Stakeholder Theory. Introduction. Higher education in Asia country and HE firms with high technology operation have been competing fiercely in Asia. Due to lack of study, lecturer presentation at Banten institution were given. The researcher developed a research model to measure job satisfaction and accounting lecturer performance based on many variables. Problem statement. Lack of consent from participants as well as principal to pressure future HE prospect for investors and stakeholders. University administrators should provide the most accurate information in the HE documents to potential investors to improve lecturer quality and market orientation. Objective. The journal focuses on the research model used to analyze the influence of job satisfaction and accounting lecturer performance based on defined variables. Three factors that can affect a person's job happiness and performance are internal control, transparency, and in financial management and continual education. Findings. The findings of TPK, which has a high indication to KDA with a value of 3.88. The research discovered through the use of equation model 1 and 2 that the best estimation was that TPK would have an effect on KDA with the best prediction value of 3.5. The determination value was 71%, which demonstrated that the prediction are more accurate than they were could. Conclusion: Internet control, financial management, transparency, and continuing education will be able to enhance HE invention as well as be able to improve the job satisfaction and performance of Indonesian accounting lecturer. Recommendation and contribution of the study. According to stakeholder theory, internet control may benefit some parties. This may reduce participant and principal concern, making it easier for investor and stakeholder to pursue future HE opportunities. These ensure issues are handled fairly. Transparency improve government. The organization must give honest information to promote government accountability and performance and to avoid injuring stakeholders. Conclusion: It should be evident that stakeholders other than shareholders contribute to form and affect the behavior of organization. This is the conclusion that can be derived from the supply fact. Okay, that's all from our group. Thank you.